Hello, everyone. This is Joe Breeden. We'll go ahead and get started. Thank you for joining us today. We're going to talk today about stress testing for pandemics and with specific reference to the SARS recession that happened in Hong Kong in the past, and just some background discussion about where we are today and what's happening. I'll be happy to take questions. If you have questions as I'm going through, please go ahead and send them through the QA function, and I'll do my best to address those as we go along. For myself, I think most of you joining the call know my background. I have been CEO of Prescient Models for about 8 years now, and Deep Future Analytics is also something we're involved with specifically for credit unions and community banks. And recently, I was asked to be president of Model Risk Managers International Association. And so this webinar is a joint presentation of all three groups. In fact, you'll be hearing more about MRMIA in the near future. We have a website that'll be coming up in a couple of weeks, and I look forward to telling you more about that. For now, I want to start just by going through. We're going to talk about what we know about coronavirus. So we need to understand where we are in the current situation. I'll take you through the analysis I did in the past for the Hong Kong SARS recession, because I was actually working with clients through that recession in real time, and then years later was given a chance to revisit that with all of the data that was accumulated from that recession and later on. And so you'll see that summary analysis. And then we'll finish with a discussion of what would a possible coronavirus recession scenario look like. And I did my best just to put together some actual scenario elements. GDP, unemployment, what it might look like in the US. And so we'll finish out that way. So thanks for joining us, and I will get this started. The first thing is, this is what we're talking about. COVID-19 is the new name for the Wuhan coronavirus. And if you wonder what viruses look like, they don't all look like this. Coronaviruses are called that because it looks like a crown. It's got a spherical shell with these spikes extending out from that. Everything about a virus is mechanically useful. These are little machines, and so those spikes are actually part of how it invades a cell. Once it does invade a cell, it then replicates. It's got its RNA in this spiraling loop in the center of the virus, and that's what goes to work once it has invaded. We've already sequenced the RNA of this virus, and it's known that it is 70% similar to the SARS virus, severe acute respiratory syndrome. It's also known that it's 96% similar to a coronavirus in bats that was previously identified. So there's still some discussion about how this virus actually passed to humans. They know where it happened, a wet market in Wuhan, but they are not certain of what animal it came from, and yet that correlation to bat viruses is a strong suggestion. Now, we don't necessarily have to know a lot of biology in order to talk about stress testing, but I thought it was worth going through with a few things that we know. So just some background. There are 7 known human coronaviruses. 4 of them are endemic, which means they just circulate through the population. Most likely, if you had a bad cold at some point in your life, it could have been a coronavirus. What we call a cold or a cold virus is actually a collection of different viruses. They're not all the same. And so we don't really notice coronaviruses these days. In fact, in general, viruses tend to evolve to be less deadly over time because the deadliest viruses burn out in the human population before they get a chance to spread. What makes the coronavirus difficult is this recent statements that it can be passed by those who don't show any symptoms. So that's the kind of behavior you get in viruses that are going to become endemic. SARS and MERS are not currently circulating. Both of them were more deadly than what we think the COVID-19 virus is. So I have been asked, one thing to keep in mind is that human immunity, once you've been sick and then you get better again, how long are you immune? There's no universal answer, but experience with coronaviruses suggests that it's probably not lifelong, but it probably is several years. So you wouldn't expect to get this again the same year, most likely. So because of this behavior that the coronaviruses can spread before you've got it, and because of the amount of spread so far, it's quite likely that it's uncontainable. Of course, they're working hard to contain it, but there is no guarantee that it can be contained. It's interesting to look at what we know about the spread of the virus so far. So there's a website run by Johns Hopkins, and this is one of the graphs from that website. Now, as a data scientist, I'm fascinated by this website. I've been checking it every day. And watching this data come in, I believed just earlier this week that we were starting to get a handle on the spread of the virus, that it was still spreading, but the rate of growth was slowing. And you'll see statements in the news from professionals saying essentially the same thing. And then Wednesday, they announced that they've changed how they report confirmed cases of the virus to include MRIs and perhaps other things. The point was what looked like a decline in the rate of transmission was actually a decline in availability of test kits. This time series and the reports that you see in the news every day are on confirmed cases. They are not any kind of a measure of how many people actually have the virus. The truth is we have no idea how many people actually have the virus. And there was a paper about a week ago to medRxiv that suggested the actual spread of the virus is probably 20 times greater than the confirmed number of cases. It's a big number, and I know that sounds scary when you see the confirmed number of cases is 65,000. But that's just where we are in all of this. So the number of confirmed cases is useful to keep an eye on, but this is a good lesson in data science that we have to be mindful of what the numbers mean. They don't always mean what we hope they would. Now, if it was totally uncontrolled, we would expect exponential growth through the population until you start to hit some kind of barriers. What we see is not exponential growth. In fact, it looks a lot more like linear growth. And I think you can give authorities credit in China for limiting it so that it's not uncontrolled, but it is still spreading. Now, keep in mind that most of this is what's happening in China. Other countries haven't contributed much yet, and there's a lot of unknown there. So there's a good short article that I think came out either Wednesday or Thursday. It was an interview with Mark Lipsitch, if that's how you pronounce that, from Harvard School of Public Health. He made a few comments. First, there's no evidence that warm weather will halt the spread of the virus. It is known that it's spreading in Singapore. Singapore is on the equator. There is no winter in Singapore. So if it's spreading there now, it could change the rate of spread. We really don't know if it spreads faster in winter or in summer. But there's no reason to think that when summertime comes, this will dissipate the way seasonal flu does. Also, the Harvard School and others have done air traffic simulations because we have records of flight patterns. And based on the simulations, they estimated that there should be, now I try to remember, but I think it was something like 49 cases of the virus spreading from Wuhan to Indonesia. So far, no cases have been reported in Indonesia. Statistically, that's unlikely. So what's more likely is that it hasn't been found yet. And likewise, there should be a large number of cases in Cambodia. So far, only one has been found. That's also unlikely. So odds are it's in a lot of places we just don't know. And there's not a lot that we can do about that. In fact, there was news that an elderly woman in Japan passed away from the virus. I believe it was yesterday, and they don't know how she caught it. She has no known contact with anybody who had it, which means it's circulating somewhere. So the level of transmissibility, so if someone catches it, how many other people are likely to catch it? This is an extremely difficult number to quantify. If you read about the history of measuring this for seasonal flu or other pandemic flus or SARS, that number is affected by containment efforts, by the conditions, whether it's a school or an office or you're at home. And there's no real universal number. So you see a lot of numbers were quoted. Keep in mind that the error bars on any number is huge, even viruses that have been around for a long time. So what's being reported now is that the transmissibility seems lower than SARS, which is about 3, meaning 3 new infections for every existing one. And it could be as much as 2. If it's less than 1, it will dissipate. MERS dissipated pretty quickly because the infection rate was less than 1 per person. It was not very easy to pass from person to person. But we know this disease is passing quite effectively between people. As far as severity goes, estimates are that it's worse than a seasonal flu. Again, this is difficult to estimate. Usually about 1 out of 1,000 people infected with seasonal flu die. It doesn't appear to be as bad as SARS, which is 8 to 9%. MERS was up closer to 40%. But somewhere in this range between seasonal flu and a more severe disease. And it's hard to tell. It depends on medical conditions. And so even these historic numbers on how lethal any disease is depends a lot on the era that you look at. And I'd also point out that there are a lot of papers out on medRxiv about how to estimate the mortality rate from COVID-19. And keep in mind that for that rate, both numerator and denominator are highly uncertain. We don't know how many people have it. The vast majority appear to get not much more than a cold. And we think we know how many people die of it, but not with complete certainty. So if we mostly know how many died from this disease, but we have a very limited idea of how many actually have it, then any estimate of mortality rate is highly suspect. It's going to be very biased. But with all that said, Professor Lipsitch says that it will affect society like a very, very bad flu. That's his forecast. In fact, I've heard talks recently by a few professionals who have said they don't expect containment and they expect it to be equivalent to a bad flu. Now, what is a bad flu? Well, in 2017, 80,000 people in the U.S. died of flu. This year, you've probably seen the headlines that so far about 20 million people have had the current seasonal flu, and somewhere around 10,000 of those people have died. So that's a kind of ordinary flu year is 10,000 people. So if it comes here, it could be worse than that. We don't know. This is a nice graphic I borrowed from the New York Times, and it's to give you an idea of how all these numbers fall into place. And keep in mind when you actually go back and ask what is the source of these numbers that the confidence intervals are huge. None of these are actually known very well. And that very large pink box is the range of possible estimates right now for this coronavirus. I added a little yellow box around seasonal flu because in fact that one is not nearly as well known as that point estimate would indicate. So we have some precedent for this where in Hong Kong there was a recession in 2002, 2003 because of severe acute respiratory syndrome. It didn't start in Hong Kong. It started in southern China, and it spread much more slowly than what the Wuhan virus has. It's because China is much more interconnected with the world, much more industrialized now than it was in 2002. And it's also because Wuhan is a transportation hub. It's very central, a connection point of air and rail and bus lines and so forth. So anything that happens there is going to spread quickly. I saw there are companies that do simulations of how diseases spread. And years ago, I saw a presentation by a group from a national laboratory that were simulating this for the US. And like Wuhan, they said it would be very bad for something to break out in Dallas because it's a transport hub. You know, there are certain cities in the US where you would get the same thing. So this is just how the world works when you're interconnected. Looking back at Hong Kong, this is some data that comes from the government there in Hong Kong. And there's certain things that jump out at you. So I'm going to highlight some of the recessions that they've had in the recent past. I started working with banks in Southeast Asia and Hong Kong during the 97-98 Asian economic crisis. And that was the most severe recession they've had at any time since. And it lasted a couple of years. It was fairly severe in terms of the depth of the recession. It was initially caused by a lot of speculative overdevelopment, and then you got a run on the currency, a flight of capital out of a number of countries in Southeast Asia. So that is followed by the global financial crisis being the second worst recession that they've had. It lasted a bit more than a year, was not terribly severe by the grand scheme of things. And in 2001, there was also a global recession, and that one was barely felt in Hong Kong. The Hong Kong economy was doing pretty well. So you had a decline in growth, and you had a period of really only a quarter or two of negative GDP. And then just as the economy was recovering in Hong Kong from the 2001 recession, you had the outbreak of SARS. And so this small, sharp drop is what that caused. Now, this is important as we think about what pandemics look like. And I may have made this point elsewhere in my slides, but what's important as we look at this is the rate of change for different kinds of recessions. You'll notice that for the severe recession in 97, 98, the onset was fairly steep and the recovery was kind of slow. If you look at things like unemployment in the US, you tend to see where unemployment rate rises fairly rapidly in the beginning, and then there's a long, slow recovery. In fact, our current recovery went with a steady rate of improvement in unemployment for almost 10 years. That's not how we expect pandemics to behave, and so we'll come back to that when we talk about specific scenarios. If you want to read in some more detail, this is not a plug, this is just a reference. The next few slides borrow from the book I wrote. The first version was back in 2010 and it got refreshed in 2014. So there is a section in there on stress testing, which coincidentally I used the Hong Kong SARS recession as one of the examples. And in that, we modeled the loan default rate, exposure at default, and loss given default. Today, I'm just going to focus on the default rate. So the solid line on these graphs is the performance in terms of default rate of a major lender in Southeast Asia. And so we were looking at their Hong Kong portfolio, and this is all with permission a long time ago. You can see in here the double peaks that happened. There's a peak that occurred from the 2001 recession, and then just as the recovery was beginning, there's a second peak that occurred. So when I showed you GDP growth, you saw those two peaks, and if you integrate those to what total GDP would be or total unemployment, the things got a little worse in the SARS recession than they were in the 2001 recession because you're already starting from a weakened economy. And then you had a long, steady recovery from that point forward. Now, in doing this analysis, I didn't actually put it in the book, but what I actually did, the first thing I did was to go out and get time series data of number of people who were diagnosed each month with the illness. And so I don't know how available those time series are today, but back in 2002, 2003, of course, that data was around. And so if you looked at number of infected people or number of people who died through that period of the recession, it correlates quite well. That you could definitely have made a model for the Hong Kong SARS recession just using number of people who were infected. But if you did that, what you would have is a model of that one disease. And it didn't make sense. It didn't make sense as a general stress testing model. And so what we did was we also looked at things like unemployment rate, residential price index, this is for grade C property, underemployment rate, real GDP rate. We studied different transformations on these and then combined them to make a multivariate model. The best model came out to be unemployment rate and what we would call house price index, residential price index, because they don't have a lot of standalone houses. And the model worked quite well. It was easy to make a model that looked at economic factors. And so what we learned from this was that it was not the disease necessarily that caused the economic stress or the defaults. The defaults that happened in the bank were not people who literally were sick. It was fear of disease that caused economic stress and defaults. And I think this is going to be the main lesson for what's happening right now. It's not how many people are sick, but how many people are afraid of getting sick with the current virus and what that does to the economy and basically to the behavior of the population in general. So this model fit that data quite well. And what it meant to us is that when you make a model that stress tests for pandemics, you don't want a new stress test model in terms of economic factors. It should be the same model you've always used because if it's a consumer loan portfolio, you're probably looking at unemployment, house prices, disposable income, things like that. If it's a commercial loan portfolio, you're probably looking at commercial real estate, interest rates, unemployment, GDP. Those you can leave the same. What you need is a scenario to feed into that model that is reflective of what it would look like if a significant part of the population is afraid of contracting the illness that you're looking at. So that's what we're saying here. And so the next thing to look at would be, well, what do we expect could happen from here? So what does a pandemic scenario look like? Well, honestly, no one knows what will happen with COVID-19. And that's exactly why we run stress tests. I mentioned that some of the medical professionals I've seen said this may not be containable, but seasonal flu is not containable. Swine flu, when it spread across the world, was not containable. And, I live in New Mexico. I remember quite well when swine flu spread through H1N1, and some of the schools had 40 or 50% absent rates from sick students, so they closed the school for a week or two. And that's what happens when it just becomes endemic. It sweeps through and eventually probably burns itself out. I honestly don't know if H1N1 is still circulating. So if we all took the attitude of, yes, it's just another bad flu, and we ignored it and went on with our lives, perhaps nothing would happen. What makes this scary is that we don't know. I would say the reason this is headlines and people are afraid of it spreading is that we know exactly where it came from, but we don't know how bad it's going to be. And that kind of uncertainty and being able to watch something spread creates fear. The Chinese government, there are stories that say they view this as an existential threat. If you're trying to be a government and, well, let's just say that fear and uncertainty are a threat to any government. And so the Chinese government has taken aggressive measures to make sure it doesn't spread. They've announced lots of stimulus programs to make sure the economy can pick up again quickly. And they've asked people to go back to work. But I know from people on the ground there, friends of mine, that many schools are still closed, even 1,000 kilometers from Wuhan. Many factories are running only at a fraction of their normal pace. So here are comments from people like Neil Shearing, chief economist at Capital Economics, said it's virtually impossible to quantify the impact of the virus on the world economy because of this central role of China in so many of the world's supply chains. We haven't had a situation like this where a major country at the center of global supply chains has to shut down for a period of time. Bank of England Governor Mark Carney said in general the experience has been with pandemics that they have quite significant impacts, but much of that's recovered in subsequent quarters. And so this is also what we saw with SARS, which is that when the fear ends, there's a pretty much an immediate rebound because it is not driven by an underlying problem in the economy. When demand comes back and people go back to work, that things can pick up much more quickly than a normal recession. So we would want to consider that. Jerome Powell at the Federal Reserve said they are, quote, closely monitoring it, which doesn't say a lot, but you have to keep in mind that they don't want to spread fear. In fact, I don't want to spread fear. My own view of this is that I'm not terribly afraid because it probably is another one of these equivalent to a severe flu, and I've had some in the past, and I will probably have some in the future. Just be smart about it. We'll get to that as well. In any case, what we expect is that the onset will be sudden because of this fear, not the gradual decline that we see going into most recessions. In fact, I'll show you a comparison to the Federal Reserve's scenarios. The Fed's DFAST scenarios are never realistic because they're always too fast to show what a normal recession would look like. In fact, they're even more sudden than what a pandemic recession would look like. And the recovery should be quick. So for the onset, we are already seeing a chain reaction of factories closing due to supply shortages, which are due to a unwillingness for workers to return. So factories in Japan and in other countries and in the US are slow compared to what they would have been. At least that's the rumor. We don't have actual economic statistics to look at. And the Fed has made it very clear that they would act very aggressively if there was to be this kind of recession. Now, at the same time, the economy in the US, we actually have created our own economic scenario models, which we're starting to use these days. It suggested that we would have had a recession, a mild one, at the start of this year, if not for the stimulus the Fed put in place last year, lowering interest rates and other things. And there's every indication that if there is a recession from COVID-19, then the Fed would do it again. be very aggressive with stimulus. So we try to keep that in mind. So here's what we are thinking could be a plausible scenario. I'm happy to let an economist do this, but I don't have one in my office. So we needed to make scenarios too, and just based on our own experience, we thought we would put something together for today. So the history for real, this is an annualized change in real GDP. Looking back, you can see the 2009 recession as a fairly sharp spike. The dashed orange line is the Fed DFAST severe scenario, which interestingly is both more severe than 2009 and starts more suddenly than the 2009 recession. I'd say there's already not much chance that we will experience it exactly the way the Fed has it right now. If we try to make a plausible recession scenario, one thing we're starting with is that our model, we have an AI economic scenario forecasting model for the U.S. economy, which currently doesn't know anything about COVID-19 or the rumblings that we're hearing because there's no economic data on that yet. So based on the current predictions, just using last year's economic data, it was predicting that GDP growth in the U.S. would fall to about 1.5% annualized the first couple quarters of this year. That's the period when we would have had a recession, but instead of being negative, the Fed's pulled it up to about 1.5% with the stimulus. And then later in the year, we were expecting a bigger rebound, up to 3% or so, as the Fed's stimulus takes full effect. So in the face of that as our baseline, what could happen instead would be that this, call it late spring, we see a greater contraction than we had expected. And by summer, we could actually have 1 or 2 quarters of negative GDP. So this is basically assuming that the virus is not contained and that because of that, there is some kind of response in the U.S. that would involve less spending, fewer services being offered, etc. So this is assuming that it doesn't trigger a bigger recession. It's assuming that there is no underlying house price crisis. I don't really think there is. It's assuming that, you know, other than this minor recession we might have had, that there's no great tension underlying the economy that would be triggered by this. And it assumes the Fed responds aggressively. And so given all that, if this ends by, call it end of summer, that whatever the virus will do has happened and people basically start to go back to their lives, then you'd expect a rebound. And we've seen other economists say basically the same thing, that they would expect the recession not to be too severe and the rebound to make up a lot of what's lost in the near term. And so we've got a pretty rapid rebound and then relaxation from that. If we look at the unemployment rate, again, different than the Fed's scenario for unemployment rate, you can see comparing the Fed's severe scenario for DFAST to what happened last time, their scenario isn't really how unemployment rate scenarios happen. And that's because if you said there's going to be a recession, unemployment usually sags with a lag. And so we've tried to put in a realistic lag in unemployment based on the fear of disease, but a pretty quick recovery, because as soon as services pick up and people start shopping, you could see a ramping up again. So we're trying to capture here a pretty sharp, quick recession. In fact, this looks a lot more like the 2001 recession. It could be even quicker than that. So I've seen people ask, what is the solution? And this was at a conference I recently attended someone who was from China asked a medical professional what to do about the virus. So when I say what is the solution here, well, there's no magic solution here, but everyone says, and so just to repeat this, because if we're going to talk about this, it's fair to make a few points. Health agencies are doing reasonable containment procedures. They can't shut down the global economy. They don't want to create a panic, but they can do a lot of work on tracing things. So right now, if you read in the news that the virus is spreading faster in Singapore and Japan than it is in other countries in Southeast Asia, I heard this morning, that's not actually true. It's that those countries have aggressive healthcare systems who are doing person-to-person trace of the virus, and so they're going to find more of it. Other countries, which may include Indonesia and Cambodia, where you don't see it being reported, doesn't mean it's not there. It's probably just not being as aggressively traced. So I think Singapore and Japan are more the model that you'll expect in industrialized countries, Western countries in the US. The public should be vigilant. Again, being at a conference, I have to say, I was a little disturbed at how many people sneezed without covering their face, or didn't know how to sneeze, which is use your elbow or a cloth, don't sneeze in your hand, and then walk out the door. So some things they teach our kids in school, I know the grown-ups still need to learn. And we need to wash our hands a lot more. In general, hand sanitizer is not a good idea. Antibiotic sanitizers are something that drives evolution of germs, and in fact you're seeing them phased out globally because germs are evolving to be immune. Soap and water works better because germs and viruses, germs actually stick to surfaces, and soap is a solvent that will dissolve essentially the glue that they're using to stick to a surface. So warm water and soap is a solvent that erases the glue and lets it wash down the drain. That's all you want. And probably something companies should think more about. The U.S. is notorious for not having as much sick leave as the rest of the world. There are people who have said we might want to think about that. At the very least, we need to encourage people to stay home if they're sick, or let them, if they're only mildly sick, work from home. So in general, employees should keep working if they can, and consumers should keep shopping, and we should ignore this as much as we can, as long as we're being smart about the rest, because we do want the economy to keep going. So when do we have to get more serious about this? Right now, we're all just watching. We might run stress test scenarios, but I'm still going to work and doing my job. And what we want to watch for is a more widespread drop in shopping, retail sales. Travel and tourism, of course, happens first. But statistics like weekly hours worked, businesses, if they see decreased demand or increased supply so that they can't meet demand, may have to cut back on hours. That's always an early indicator. You'll want to filter out food purchases because people will keep buying groceries. In fact, based on what we see in China, you tend to get a run on grocery stores. Those things all lead to temporary store and factory closures. Unemployment will eventually start to rise, and you'll eventually see GDP drop. As far as house price indexes, I was focused in the scenarios I did on GDP and unemployment. I didn't do house price because we even saw this in Hong Kong. This tends to be neighborhood by neighborhood. In Hong Kong in the SARS recession, neighborhoods that were hard hit by SARS, nobody would go to buy homes. Prices fell pretty rapidly, but temporarily. If there are certain neighborhoods or cities in the U.S. that get hit by it, I'm sure house price will decline, sales will decline, but would rebound pretty quickly thereafter. So I don't see it as a nationwide thing, more of a local thing. So that's what I won't say that's what I know. That's what I'm seeing. That's what I can guess. These are all speculations. I'm just doing my best guess to share what I've seen and what I've been reading. In preparation for this talk, I've read as much as I could. So that's all I'm trying to share. This, I mentioned Model Risk Managers International Association. In fact, I put this talk as part of that because of stress testing and the uncertainties behind all of this. I think your stress test model in this case can be good, but your scenarios are uncertain. Anyway, Model Risk Managers International Association, I think, is an increasingly valuable organization. It was founded by Dennis Bennett, who was formerly head of Model Risk Management for FHLB New York. Dennis was a great guy, and he was a good friend. He passed away about a year ago. And so I've picked up the organization because I think it's important. I think the organization can be a valuable third voice. The regulators often provide somewhat vague public guidance on model risk management. They're leaving it up to you, kind of in quotes. But in private, of course, they may have a lot more to say. Auditors and validators are really incented to ask for more. Their job is to reduce risk, but it's on them to make sure that nothing bad passes. And so it's not their job necessarily to balance risk. And we see this when we look at in-house validators or third-party audit firms that, you know, to get the trade-off right between balancing cost and benefit, we really need another voice. And that's what I hope MRMIA will be, an industry association where people can come together into working groups, create position papers to provide thought on what is an appropriate balance between cost and benefit, and put this out for consideration by auditors and regulators. So once our website becomes active, hopefully by the end of this month in February, then what we intend to do is to create working groups on special topics, things like MRM for machine learning, MRM for CECL, and right-sizing model risk management. These will probably be three of the first working groups we have. We'll create groups from industry who are motivated to come together and try to create a position on these. And we'll have other activities that go on with MRMIA as well. But I'm looking forward to seeing this being a lot more active this year. So thank you for joining. I've got some questions in the queue here, but this is a good time to open them up. If you have any other questions, feel free to type those. Just to cut down on background noise, we've had comments turned off. But one question I got in all of this was, do we have scenarios for other variables? I showed you GDP, unemployment, house prices. In fact, our neural net scenario generator started life as a scenario generator where we could give it GDP scenarios and then have it generate outputs for 20 or more different economic factors. And I have not run this through that yet. So what I can do is to create scenarios where the GDP scenario I showed you is used as an input, and then we look and see what kind of corresponding outputs we would get. If people are interested, let me know. There's another quick comment in and asked what it would cost, and I don't know yet. But our goal in doing economic scenario generation is to make it very cost effective. I know there are plenty of well-known organizations who provide high quality scenarios. They probably have one themselves. I know they tend not to be very cheap. And so our goal is to provide something reasonable and affordable to our clients. And I have to say, these neural nets for scenario generation with a little bit of practice really work quite well on giving expected values and ranges of values. If there are any other questions, tell you what I can do is hang on the line just a little bit longer to see if anything else comes through. But that's what I've seen so far. So thank you for your time today. I appreciate everybody joining. And always feel free to follow up later if you have any questions. I'm always happy to respond by email if you get any other questions about what we presented. We will also be making this recording available. So if you signed up and you'd like to see this again, you can follow up with Charles Hoy. I assume this will be on our website, but Charles will know more definitively about that. Okay. Well, I see some specific questions that I think I'll just follow up by email rather they're not such general questions for the group. So I'll leave it there. Thank you everyone for your time today, and good luck with your work. Talk to you soon. Take care.